Next guest says markets have been remarkably resilient given the geopolitical headwinds and is surprised bond yields have not rallied meaningfully. Jason Trennert's here, Chairman and CEO of Strategas. Is that right? So you think you're calling, so it's the opposite for the bond itself. So you're surprised that the yields aren't even higher than they are right now?
Well, I'm really surprised that yields aren't lower.
So you're saying that you're surprised that bonds haven't rallied?
Right.
So the person, yeah, okay.
Okay. So, I think there would have been a flight to quality given all the things.
So it's not what you're saying.
Yeah, so it's not what I'm saying.
Okay.
But I think there should have been a flight to quality, but by the same token, wars are inflationary, and I think we're just reverting back to the mean as far as bond yields are concerned.
You're not turning bullish all of a sudden on stocks, are you?
No, I'm more cautious. I do think, I've had a reevaluation on the recession this year because I do think if I miss something, it's clear that the labor markets are much more resilient than we might have thought, and that might be because we're short of labor, particularly working people, entry-level workers. I just think we don't have enough of them. So despite the fact that profits have been a little bit lower and profit margins are lower, companies have been very loath to lay people off. So that's the unemployment rate is at 3.8%. You're at full employment. So it's hard to get a recession out of that. But it also is hard to control inflation.
You think that the relative stability you're seeing in equities is masking some underlying weakness that is yet to be realized? I mean, are we on a precipice, or is this really showing that the underlying fundamentals are still good? Because the world is I mean, the world. I've seen, Jamie Dimon and others say they've never seen things more concerning. The geopolitical, the economic backdrop. It's really frightening, even more so than normal.
I think he's right. I think there's a lot of things that are frightening. The thing that frightens me the most right now, I have to say from a market perspective, is bond yields and the fact that in the absence of quantitative easing, in the absence of the Fed buying treasury yields are going to move higher. And that's because our spending is out of control. We're running a budget deficit that's 5.5% of GDP at full employment. We've looked over the past 70 years. We've never run a budget deficit of 5% of GDP when the unemployment rate wasn't above 7%.
Jason, people have pointed to a lot of these concerns for quite a while, and then the government steps in and does something to change it.
That's right.
What would stop the Fed if things get really out of control from bringing back QE?
No, it's a great, and listen, we brought back QE for a short period of time after Silicon Valley Bank failed.
Right.
We
switched course this year. But when I say this, people are like, "Oh, that's not going to happen for a very long time." We switched course this year.
No, it's debatable whether. I personally think it's a decent bar bet. No one would ever know. But if we let Silicon Valley Bank fail, I'm convinced we would be in recession already. Mm-hmm. But we didn't. The Fed flooded the system with $400 billion of assets. We essentially backed.
So we still have a Fed put there.
Every deposit.
The only forever. How do you ever convince people there's not one?
I think the only difference now is that two things that are different. One is that inflation is a binding constraint, where in many ways, as I've said before here, the Fed is fighting the federal government to bring inflation down. So if you're serious about bringing inflation down, it's hard to do it if you're running massive budget deficits. Mm-hmm. That's the first thing I would say. The second thing I would say is that interest expense on the debt is now spiraling out of control. So again, the Fed could step in and buy treasuries, as they've done before, but something else will pop out someplace else, and that'll be inflation. So there's nothing stopping the Fed from doing that, or the Fed put. It's just that it's very hard to get it all set so that you have high growth and low inflation.
At least we have our political act together.
At least we have
a couple of great candidates.
At least we have great.
The Fed chairman actually tried to say, "Forget it. You guys have to fix it yourself." The politicians are going to throw him out from either party. Show me the next president who doesn't do that, and they're going to scream at me because we're out of time.
Listen. I feel very strongly this idea that the Fed was the only game in town. I believe was frankly unconstitutional. I think it was a great error that the Fed committed. They should have put that back.
To plan this out. It's not the only game. It's also pickleball.
It's also pickleball. Yep.
Those are the only two.